Well, good morning, everyone. On behalf of the Arizona Small Business Association and Salt River Project, welcome to Arizona Speaks, Accessing Capital to Grow Your Business. My name is Yolanda France, Manager of Mid-Sized Business Account Management with Salt River Project. Thank you all for joining us today. And though we can't be together in person, we're just really grateful that we can gather virtually. ASBA has an amazing event planned for today, and I can't wait to get started and delve into how small businesses in Arizona can access the capital needed to expand and thrive. Now, SRP has a long history of collaborative partnership with the Arizona Small Business Association and the small business community. At SRP, we know how important our small businesses are to the overall health and vibrancy of the Arizona economy. We have partnered with ASBA to bring critically important resources to small business owners throughout Arizona, and today's program will highlight just how important those resources are, and especially capital, to the success of Arizona small businesses. SRP has provided water and power for more than a century to help our region grow and prosper. We work hard to keep the lights on and the economy humming to ensure Arizona remains an incredible place to run a business. Together, SRP and ASBA are committed to the empowering business owners and advocating for a pro-small business landscape where businesses can successfully grow and prosper. Without further ado, it is my pleasure to introduce today's moderator, Jen Daniels. Jen has been a longtime champion and advocate of the small business community, dating back from her time as council member and mayor of Gilbert. Under Jen's leadership, Gilbert's businesses thrive, and she continues to be passionate about growing the state's economy. Jen currently serves as on the State Transportation Board and also owns and operates her own small business. Please join me in welcoming Jen Daniels.
Yolanda, thank you so much. And thank you to everybody who's participating today. I would imagine for SRP, it is no small task given the incredible monsoon season that we've had across the state. So on behalf of everyone, thank you so much for continuing to work to keep the lights on. You truly are doing your part when it comes to making sure that Arizona's economy is humming, and we're incredibly grateful. We have a fantastic program for you today, and I'm so excited that we're all here talking about this really important topic. We need our small businesses to thrive in the state of Arizona, and we know that you need access to capital, and we know that you need resources in order to do that. So we're here to talk about that, and I have three incredible panelists that I'm excited to introduce you to. I'm going to start first, though, with thanking our program sponsors, SRP, Cox Business, National Bank of Arizona, Apex CPAs and Consultants, Banner Aetna, the City of Surprise Economic Development Office, QNAP, and Southwest Airlines. That's a great lineup of sponsors. And again, thank you to each of those organizations for seeing the value and the vision of the Arizona Small Business Association and this incredible forum that we have to talk about access to capital. We have John Lewis here with us from the National Bank of Arizona, Stephanie Sims from Finance Ability, and also Leslie Pintor from Growth Partners Arizona. Each one of you has this incredible story. We were able to have a pre-call ahead of today's session. And I got to know each of them. You are all in for a treat because not only have they lived and worked in this industry for so long, they each have a different niche that's going to be an important aspect of this conversation. So I would love at first if we can just introduce each other. So John, why don't you go ahead and start? John Lewis from National Bank of Arizona. Tell us how you got to where you are. Nobody takes a direct path. It's always circuitous. How did you get here? And just for the fun of it, in the last 18 months, a lot of us have developed either new skill sets or revived something that we maybe thought we had lost passion for. So we're going to ask you just fun to tell us something, maybe a skill, a talent, or something you've picked up over the last 18 months.
All right. Well, I'm John Lewis with National Bank of Arizona. It's a pleasure to be with you today. I'm the Senior Vice President of Business Banking for the bank. How I got where I am today, that's an interesting question. And it's been being able to, I guess, go where I needed to go. So I started my career with the bank 16 years ago in the White Mountains, and then moved with the bank to Yuma, Arizona, and then to Flagstaff, and now I'm in the Phoenix market. So part of how I got where I am is by being willing to do the things I was asked to do, I guess, to move around the state. And it's a great opportunity to learn a lot about our beautiful state, which has been amazing. Something that I've learned over the last 18 months, I think like a lot of people, when you're stuck in your home, you look at things that need to be fixed. My wife is a much better than I am with handiwork, but I guess I got better at doing demo, knocking things down and using a Sawzall to cut things up. So I will leave you with that.
Well, we hope over the next 18 months you learn how to put it back together. That's the secondary skill that
we're getting close. We're getting close with that.
Awesome. Thank you, John. Leslie.
Hi, good morning, everyone. And thank you to ASBA for hosting this event today. It's a really important topic. Glad to be able to participate. I was born and raised in Douglas, Arizona, and my first job out of high school was at the local credit union, and it sparked my interest in finance and banking. And so I've spent the majority of my career doing that. After leaving Douglas, I spent about 14 years in Phoenix and then about 25 years in Tucson, mostly working for banks, including National Bank of Arizona. I spent many years as a colleague of John Lewis's. And in 2015, I joined the board of directors of Growth Partners Arizona, which is a nonprofit lender. And so when our part-time loan fund director retired in 2018, I was hired to be the first full-time executive director of the organization. So that's how I got where I am now. I love combining my love of finance and banking and lending with my love of serving the community. And so that's how I got here. One of the things that I've learned over the last 18 months is all of this tech stuff and Zoom meetings and all of these different kinds of webinars prior to the pandemic. In fact, I remember distinctly in January of 2020 thinking, I've got to start learning how to do Zoom because I've got board members who aren't all in the same place. And I was terrified about having to learn that. Well, had to learn it. And I think I'm getting pretty good at it. Thank you.
Without fail, we do still forget where the mute button is. I mean, it just happens.
Oh, yes.
So it will always happen. Stephanie Sims, will you share with us your path?
Sure. Well, thank you so much again for allowing me to be part of this panel, and thanks to all the sponsors who've made this possible. I'm super excited to dive into the conversation, but just a little bit about me before we do that. I am the founder of Financeability. I come from an investment banking background where I did about 10 years of service, although not necessarily community service, and saw about $5 billion of transactions. From there, I moved into a startup that was funded by both angels and venture capitalists. And I got to see that experience from the founder side for another 10 years. We successfully sold that company to a publicly traded company. So I got to tell the nice little story about the exit. But the way I got into doing what I'm doing now is that my parents bought a business when I was in high school. They owned that business through all my travels. I lived both here in the US and overseas. And when I came back, they were ready to sell that business. And I recognized in working with them that they were amazing in what they did. They served their clients well, they built a great team, but they didn't really know how to speak to investors. And so what I do now is take that experience I had with them and help other entrepreneurs build what I call economic stories that make dollars and cents so they can talk to the right kind of capital and connect with those folks in a way that's going to give them the best chance of success so they can continue to grow the business that they love.
I love that. And I love that it's a personal story as well, Stephanie. And hats off to you for being willing to jump in and assist with your family. I love that. So we'll dive right into some of the questions that we have. And I'm really excited about this. And we'll just kind of go back and forth. And we obviously have traditional banking. We have the nonprofit and small business side of banking. And then we have the private equity and venture space. And so we really can cover all of it. And at the end of our dialogue, we do want to open it up for questions for our audience. So feel free to use that chat box to send us questions, and we'll do the best we can to get to as many of those as we can. So right now there is a desire to access capital. And I think people that applied for PPP loans and other types of funding sources sort of learned by fire the things that they were going to need to do and have available and on hand in order to answer a lot of these questions. Is the traditional banking, and this is more for you, John, is the traditional banking still like that? Are we going to need to have this long list of items we're going to need to be able to provide to access money from a bank. And then subsequently, same question for each of you in each of your spheres of influence. But we'll start with John.
Yeah, I'd say generally speaking in banking, with the way that banks are regulated, the amount of information being required can continue to be similar. I do think through the PPP process, there was opportunity for people to access that capital without providing as much information. Where we're at today, yes, the same type of information will be required as was in the past. I will say that banks in general understand, are taking into consideration what happened in 2020 and are still willing to lend and understand the changes in the business in 2020 and identify, hey, those are one-time events and what can we do going forward to continue to help this business.
That's really helpful. Leslie, are you seeing the same needs apply in your sphere?
Yes, we are not a regulated lending organization, but we still need to collect historical and projected financial information on your business so that we can understand what you do, how you do it, and how you've been able to perform in the past. I will agree with John that we definitely are taking into account what's been happening over the last year and a half and understand that your capital needs may be a little bit different as a result. But being able to tell, the previous points about telling your story, you need to be able to tell the story about what your business is and does and how you're adjusting to the situation over the last 18 months so that we can understand what's going on in your business and understand how lending money is going to help you grow.
Thank you. Going over now to Stephanie. Now, private equity is going to be a little bit different, I would imagine, and what's being required and maybe more extensive than I think people might imagine.
And that's a great point, Jen. I think a lot of people think, oh, okay, well, I have the option of going to the bank where they ask me for this laundry list of documents, or I can just go talk to an investor because that's super simple. It's just a conversation. And so I want to dispel that myth right now. Investors, although they are not regulated by in the same way that banks are, they have an obligation to the investors who have given them the money to invest. And so quite often they have even stricter regulations, or they need to get more specific types of information to satisfy their own investors. So I don't want you thinking that, oh, gee, it's going to be super simple. I'm never going to have to show any documents if I want to talk to an angel investor, venture capitalist, or private equity firm. I would encourage you, if you're looking for capital at all, to start to put together all the documentation that you have, as Leslie mentioned, around your financials, both historical and projected, but also start to think about all the legal agreements you have in your company. And you'll find that if you start to assemble all of that in one place, whether it's a Google Drive or a physical binder or whatever, you're going to be a lot better prepared for whatever kind of capital you need. And then you may only have to go looking for 2 or 3 documents to give to your lender or to give to your potential investors.
Great points.
So you touch on a really key point there, Stephanie, and I think it's preparation is key and ensuring that you're prepared moving forward. So if you are advising a business, any of you, and I'll start with you, Leslie, if you're advising a business, I know you spend a lot of time coaching different businesses as you're going through this process. What are you telling them to be prepared with? What do they need to know? What do they need to be able to have quick access to?
Exactly. To Stephanie's point, she hit the nail on the head there. You're going to need your legal organizational documents, your articles of organization or articles of incorporation, depending on the kind of business you are. You're going to need your bylaws, your operating agreement, again, depending on what kind of organization you are. All of that's going to need to be current and in one place. I find with the borrowers we're working with, that's one of the toughest things for people to track down. We do a lot of business with nonprofit organizations, and that's a little bit tough because sometimes the documents are all over the place, so that those need to be in one place. Historical financial information and tax returns. Some of you may be sole proprietors or LLCs that where the financials run through your personal tax returns. You're going to need to provide those business tax returns. If you're using QuickBooks or some other sort of business accounting software where you can pull off at least 2, maybe 3 fiscal years of financial information, and a current year-to-date financial statement is important. You'll also probably be asked for projections or budgets. And so that's really important too. And we have some sample templates that you can use. I'd be happy to share with the ASBA folks, and they can get out to the participants on the webinar today. A good cash flow projection is really helpful because in the end, cash flow is what's going to repay your loan. And we know that historical results don't necessarily indicate future performance. So we want to know, what are you thinking is going to be happening in your business, particularly with the loan you want to get? How is it going to help you generate more revenue or save money so that you'll be able to not only repay the loan, but grow your business?
That's great. John, Stephanie, do you guys have anything you want to add to that as you're thinking through the best type of preparation for a business?
Well, I think for the most part, that's right on with what has been shared. One of the things as a business, as you talk to somebody that you're looking for funding from, to be able to really explain to them why you do it in the process you're doing it in. Because for the person looking at the paperwork, we don't necessarily fully understand that. So it's a learning experience for us, and we're all about learning. We want to understand the business and do everything we can do to help that business succeed. But we need that help, that guidance. And so as clear as you can be is always helpful. When we get in a situation where business owners aren't clear in what the business is doing and how they're doing it, it makes it very difficult for us.
Great.
Yeah.
Can I add something there?
Oh,
go ahead, Stephanie.
Go ahead. I was just going to say, one of the things I hear a lot from investors is that the person who's asking for funding is having a hard time expressing how the money they're looking for is going to grow their business. A lot of times they do a good job saying how they're going to spend the money, right? So like, I'm going to hire somebody, or I'm going to buy a new piece of equipment, but they don't really explain how those investments are going to grow their business. And so I think I would encourage all the entrepreneurs to really think through not just what you're going to spend the money on, but how do those expenses or investments grow your business so that you're excited about putting that kind of dollars into people or equipment or whatever it happens to be.
That's a great point, Leslie.
Great point. Yeah, I would also say, when you're telling the story about your business, it's important to tell a potential lender or investor pretty much everything that's going on, the good, the bad, the ugly. The question I always like to ask business owners is, what keeps you up at night? What are the risks in your business? What are the things that are challenging for you? Because let's face it, all of us on this panel here represent organizations that are in the risk business. I mean, that's what we do. We assess risk in any sort of request we're processing. And so we're trying to put a box around that risk and determine whether it fits within our comfort level and what mitigates those risks. So, tell us those bad things or challenging things so that we can think about that and assess how we can still help you while putting our risk in a box. And if you think about it that way, maybe it makes more sense why we're asking some of the questions we're asking.
Yeah, that is really helpful. And I can't help but think that we all have blind spots, both as humans and as business owners. And if we can acknowledge where those are and seek out help, I think one of the things that I learned from each of you as we were discussing how this was going to go today was the need for businesses, and particularly business owners, to be coachable. How often we get in our own way when it comes to growing our own business. And if we can be honest about where those gaps are, we're going to be there's the likelihood of us being able to address those things and move forward. So as you've worked with different businesses, and Stephanie, we'll start with you on this question. As you've worked with businesses, tell me about the ways that businesses maybe haven't been coachable, and how outcomes would have been different had they been willing to listen?
Yeah, so it's a great point. And ultimately, early stage investors are always investing in you, the founder, and the founding team a lot more than they're investing in the business, right? In an early stage, the business model maybe hasn't been proven yet. You're not really sure it's going to work. So what they're investing in is you and your vision of how you're going to build this business. And so I think it's super important for you as an entrepreneur to really be honest with yourself and to start to understand what your strengths and weaknesses are, what the strengths and weaknesses of your team are, and what the strengths and weaknesses of your business model are. Because the sooner you can identify what hypothesis or experiment do I need to prove out first. Maybe it's that people will buy, but maybe it's that you can provide your product or service at scale. Maybe that's the real risk factor, going back to kind of what Leslie and John mentioned. You need to identify that before you start to talk to people about capital, because if you're going to them and you're presenting to them this beautiful, perfect picture that there's absolutely nothing wrong, that you have everything you need, they're going to be asking themselves, is this person telling me the truth? And they really believe this, in which case I'm not sure that they understand their business well enough. Or is this person lying? In which case, do I want to do business with them? Do I trust them to tell me what's really going on and when they might need help? So I think one of the things that I have seen founders be really successful at is, in any pitch, to not just present the beautiful parts of your business, to not just present what works well, but to come to the person you're talking to with a specific ask. Maybe it's an area of expertise that you need help with. Maybe it is capital. Maybe it's also just some experience, right? You've been through this before. How would you handle this situation? And quite often in doing that, you get more than you bargained for, right? You might not get exactly what you wanted. You might not get someone to write you a check, but you're going to build a relationship. You're going to get some good advice, and you might even get some really good connections out of it. And so I would just encourage you as an entrepreneur to really be honest with yourself. And then if you're having trouble doing that, find somebody who you trust to be honest with you and to help you develop that muscle of being honest and start to be more coachable.
That's great insight. Leslie, I'm sure you've met with both nonprofits and small businesses throughout your career where you think, oh, if you'd only do that one or two or three things, the entire outcome could be different. You've probably seen it on multiple levels. What are those three things or two? And how can we as business owners really adapt ourselves to the market and the world that we live in now?
That's a great question. It's kind of a big loaded question, right? And Stephanie gave some great tips. I think one of the key things, to me, what makes a really good lender is somebody who asks a lot of questions. And I think same thing applies to business owners. You all are in business because you have a passion for something, you have an expertise in a certain area, and you want to bring your product or service to the general market. But that doesn't mean you know all the legal stuff, all the accounting stuff, all of the marketing stuff. So I think recognizing upfront that you don't know everything there is to know, and you need to start surrounding yourself with people who are experts at what they do. And so start putting together a little board of advisors. Find an attorney, find an accountant, find a banker. You should have all of those people at your fingertips to be able to call and ask questions. All of us are experts in what we do. I'm not an expert in law. I'm not an expert in marketing, but I, as running my small business, my nonprofit here, I've got to find all of those people who are going to help me. So I think that's the first thing, is surround yourself with people who are experts and ask a lot of questions. It's okay not to know everything. Ask a lot of questions, not only to learn, but to get different perspectives. Even if you do know the answer, you might get a different perspective if you ask the question of a different person. So I think those are two real key things to help you as a small business owner get a broader perspective and understanding of the whole business environment.
Fantastic. John, what missteps have you seen from some of our small businesses, and how would you coach them through that?
Yeah, I think going back to being able to be coachable is important for both the business owner and for the lender. One of my customers that I've enjoyed doing business with, when I started working with them, they're in a situation where they really needed some help and guidance. And the first thing they did is first coach me for me to understand exactly what they do, and then ask me back, hey, what should I be doing in your perspective? And so since we were able to marry those two perspectives together, it worked very well. And because of that, I learned a lot about their business. They learned what we were looking for on the banking side. And now the business has grown substantially since that time. And so to me, the main thing is just to business owners, oftentimes you get caught up in the whirlwind or the busy. You're so busy, you have so many hats you're wearing, but just take the time to be able to sit down, talk through the situation, get different points of view and perspectives, and take the time to educate and coach those that you're working with also.
I'm going to shift gears to a little, oh, go ahead, Stephanie. Yeah.
I was just going to say one little added benefit of building that sort of board of advisors or that group of people that you go to give you hard love or, reality checks, is that you get into the habit of talking about your business a lot more, and you can start to understand what resonates and what doesn't. And so treat those relationships with care, but don't be afraid to reach out to those people on a regular basis, because it's also going to help you see what works and what doesn't.
Yeah, that's great insight from all three of you. So thank you. Shifting gears to a little bit more of a technical and let's call it a timely conversation. Interest rates right now are probably the lowest that they've been in my lifetime. I think a lot of us, myself included, sort of translate low interest rates to easy money. Couple different layers in this. One is, if I am a qualified business ready to access capital, is there ever a better time than now to be accessing it? That's the first part of the question. And the second one is, are we anticipating from an economic outlook a shift in those interest rates? Obviously, we're watching market conditions and paying attention to things like inflation and other economic indicators, but do we expect that to happen soon? Or as a business owner, do I have a little bit more time to be able to prepare properly to access that capital? So multi-layered question. Sorry if I layered that on too much, but I'm going to start this one off with John. In the traditional banking industry, obviously interest rates are something you're talking about probably on a daily basis.
Yeah, it's definitely an interesting time. And the question is this the best time to access capital? Quite possibly, because rates are so low and have been so low, and we expect to continue to be low for a period of time. What's interesting is there's a lot of liquidity out in the marketplace. And because of that, banks have a lot of excess lending capability, because they have a lot of liquidity sitting around to be lent out that's not being lent out today. And so because of that, yes, the opportunity to get financing today might be at a really good time, because rates are low and banks are seeking to provide funding. And so definitely a time, as long as the business is prepared and has remained healthy, a great time to build access some capital through a bank. Secondly, how long will rates stay low? I think it's hard to say. I think everybody feels some pieces of inflation out there, and there's a lot of things that the government can do that can sway those things. But I would say, yes, prepare yourself for increasing interest rates. It's bound to happen. And so as you position yourself today, if you're looking at as a business owner, if you can lock in some longer term rates at the low rates we're at today, it's a great time to do that, because then you avoid that interest rate risk, 2, 3, 5 years from now.
Leslie, is your structure the same for your nonprofit?
It's a little bit different. To piggyback off of what John just said on long-term rates, if you're thinking about or contemplating purchasing real estate versus leasing for your business, this is probably the best time to do that because long-term rates are so low. SBA financing, which you can get through the bank, is, you know, sub 3% for some of those real estate loans. So if you've been thinking about purchasing versus continuing to rent, I'd probably say jump on that sooner rather than later. Banks and organizations like mine have different cost structures. So I have to pay more for the capital that I lend out than a bank does because a bank lends out mostly checking account money that they don't pay interest on. So they have a lot of very inexpensive or 0% capital to lend out. An organization like mine, I borrow most of my money to lend out. And as an alternative lender, we are focused on borrowers who can't access traditional bank financing. So we take a little bit more risk on the loans that we offer, and so the rates tend to be a little bit higher. But that being said, they are still reasonable and affordable and much less than you would pay on a credit card or an online from an online lender or something like that. So I would say as you're seeking financing, one of the things you need to do is not only find the right type of lender for you. We all do different things. We focus on different things. We have different policy guidelines. And so you need to do a little bit of research. We're not all alike. Banks, credit unions, non-traditional lenders like us, online lenders, which I don't recommend at all because they're very, very expensive. Just do a little bit of research and find out which lender really kind of fits what you need the best. There's other factors to consider besides just a flat out interest rate.
And I really appreciate that. We're actually going to come back to that, Leslie, because that was a great segue. But I want to hear from Stephanie as well. Private equity, I would imagine, follows a completely different model than what you might consider to be a traditional interest rate, which may even include equity in your business. And so can you just touch on that component?
Sure. And you're right. When people are purchasing the equity of your business, which is what investors do, it's not like a traditional loan where there's an amount that they expect to get paid back and then they don't own anything. They become your partner. They own the equity alongside you. However, we can't say that's totally divorced from interest rates because of the fact that private equity as an investment class becomes more attractive when interest rates in the market are lower. Because if you think about people who are trying to make investments, if they have a choice between something that feels safer, like a bond or any kind of loan that has a lower interest rate, versus investing in equity, which might be more expensive and more risky, there's always people who have a different appetite between those types of investments. However, when bonds and interest-bearing instruments are so low, meaning they give them very little return, a lot more people are exploring investing in equity. So what we've seen is actually a boom in the amount of dollars being invested in alternate investment classes like private equity, angel investors, and venture capitalists. So there's actually more money available now. However, the thing I want everyone to consider, and Leslie touched on this a little bit, is the fact that there is no one perfect solution. I want you to think about funding your business as a pie or a meal maybe that you're going to assemble over time. You can have a lot of different people investing in your business, whether they're lenders, whether they're nonprofits like Leslie, or they're angel investors. You don't have to pick one and only use that one. So definitely explore your options, and find what is the best fit for you right now, knowing that you can layer on other types of funding as your business continues to grow.
And there are so many options, and sometimes so many options causes us as business owners to get a little bit overwhelmed and to go, oh, great, now I have no idea which direction to go. So I think it might be helpful at this point in the conversation to say, how do I know that it's a good lending match for me? How will I know as a business owner that the match I'm making with the bank or the nonprofit lending institution or the angel investor is the right one right now? How do I know the answers to that? Leslie, let's start with you because you're the one that triggered this thought and question for me.
Well, I think, first off, have a clear understanding of what it is that you need or want. Be really clear on how much funding you want, what do you need it for? And to Stephanie's earlier point, how's it going to help your business grow? So are you purchasing real estate? Do you need working capital? Do you need to buy a piece of equipment? All of those things. Have a really clear understanding about that and be able to articulate it. That's the first thing the lender's going to ask you. What do you need and why? So that's the first thing. And then do a little bit of research and try to find out who does the kind of lending you need. Not everybody does the same kinds of lending. So for example, my organization, we, for small businesses, the maximum loan we do is $75,000. So if you want to buy a piece of real estate, I'm probably not going to be able to help you. So that's kind of the first thing. Then find somebody to talk to, and they're going to interview you. Just to John's point earlier, they're going to interview you, ask you a lot of questions about your business, but you should also ask a lot of questions. What is it that you want out of a lender and that kind of a relationship? Because frankly, once the loan is done and you've gotten the money and you're making payments, for most lenders, that's not the end of it. We like to keep in touch with you over time, want to find out how things are working. We want to make sure that your business is doing what everybody thought it was going to do. But if that's not what you want, or you're not prepared to do that, you need to maybe think about some of those things. So interview your lender and find out exactly how that whole relationship is going to work, and think long term. To Stephanie's point, this is just a single point in time. You need this kind of funding right now, but 2 years from now, what are you going to need? 5 years from now, what are you going to need? And from a standpoint, again, my organization does not take deposits. So we are a lender only, but if you need a bank that's going to help you with all of your needs, not just a loan. And most banks are going to ask you to move your business accounts to their institution if they loan you money. So find out if they have all the products and services that you need on the depository side, and make sure that that's the right relationship for you.
Terrific insight, Leslie. And that definitely, you exhibited your banking knowledge from your historical and also your current role here. That was an excellent sort of summary. John, do you have anything to add to that? Finding the best match?
Yeah, I think what Leslie said about the ongoing is so crucial. How involved you want whoever it is that's investing in your business, whether through lending or through private equity, how involved you want them in your business, and understand at what levels will there be additional involvement required, such as annual financial reporting or testing of covenants on your loan, things like that. So you're really comfortable with that relationship going forward, to understand what's going to be required of you. So I just would really stress the importance of that.
Thank you, John. Stephanie.
Yeah, and I think what we've heard here is relationship already, which is so essential, right? To anyone who's going to be part of your business, whether it's for the 3-year term of a loan or through exit, if you're bringing in, angel investors, venture capital, and private equity, you have to be working with people that you want to build a relationship with and that you feel you can work with. And so I think the points that Leslie and John mentioned are essential. The one thing that I would add really is that you need to be thinking about whether you want a partner in your business. A lot of people are like, well, I'm going to go get an angel investor because I don't have to pay them back. And again, they have this myth in their head that like the person writes me a check and I never hear from them again. And then one day, magic happens and they love me and they think I'm great, but that's it. Generally speaking, angel investors and venture capitalists are going to be as interested, if not more interested, in getting updates from you, in seeing your ongoing financials, and in really understanding what's happening in your business, because they're taking a larger risk than, generally speaking, lenders are taking. And so again, if you don't want somebody who's going to expect you to talk to them probably monthly, to send them reports quarterly, then perhaps private equity, venture capital angels are not a good choice for you, maybe not ever. and maybe definitely not right now.
And just real quick, Stephanie, there's a myth, I think, that an angel investor is going to be at a certain dollar amount or threshold. What's the smallest dollar amount you've seen from an angel investor, and so what's the largest dollar amount? Because I think in my mind, I think, oh, an angel investor would be, $1 million+ dollars. Not necessarily true.
Yeah. Well, and again, there's no hard and fast rule. Like, somebody could raise their hand and say, I'm going to be an angel investor, and decide to write a check for $1,000. Like, they could do that if that's what they'd like to do. And we won't have time to cover it today, but there's lots of different mechanisms for taking smaller checks from people, including equity crowdfunding. So I think it's more on the company and the founder to really understand what they need and to decide what their minimum check size is, right? So if, say, you're raising $250,000, which is definitely angel territory, you might decide that you're not going to take a check smaller than $10,000, just because you don't want to have 50 people that you have to go back and talk to when you're reporting, right? You can choose that. However, as you start to move into the hundreds of thousands of dollars, I think you're going to be looking more at angel groups as opposed to a single angel investor. Now, if you're friends with Mark Cuban, Mark can write you whatever check he wants, and I'm sure it's not a problem. But generally speaking, if you're looking for larger dollar amounts, that's probably going to be more in a structured group as opposed to an individual angel. Does that help?
That makes a lot of sense. Yes. And I think puts it into context. I think we do have Shark Tank visions in our heads right now, but I do know what I know the three of you now, or have gotten to know you well, and know that this would be more of a conversation and dialogue that would be beneficial on both sides. The last point I want to get to is something that sort of came up in our pre-call, and I think it's really helpful and probably insightful, and maybe something that is non-traditional for this topic today. But Stephanie, when you and I were having a conversation, you mentioned something along the lines of, and I'll do my best to quote you. A lot of people think that capital is their challenge or their issue. Money may not be the actual issue. Can you touch on that? And Leslie and John, I'll just have both of you follow up. And as soon as we answer this question, we'll get to the audience Q&A as well, so that we can make sure that we hear and answer those needs that are online with us today. So Stephanie, money might not be the issue. What could it be?
Yeah, I hear this one a lot. When people hear that I work with companies to help them get funding, the immediate thing they say is, oh, great, can you introduce me to investors? I always ask them, how much capital are you looking for? And what are you going to do with it if you had that money immediately? And so a lot of people can answer the first question. Oh, I need $500,000 or $1 million or whatever the number is. But when I ask them, okay, great. So if you had that money right now, what would you do in your business? A lot of times I get blank stares. Like, oh, well, I'd hire somebody because I don't really like doing whatever it is I'm doing in my business. And so what I really notice with these folks is that money is not the problem. It's understanding what levers they need to move in their business to grow. Because if you can find a lever in your business that actually creates growth, it's not going to be hard for you to get someone to give you capital, because they know they put $1 in and they get $2 out, or 5 or 10 or whatever the number is. The challenge is finding that lever. And so quite often, what I encourage people to do is, if you really believe that money is your problem, sit down and make a wish list. And imagine, just do the thought exercise. You have all the money you need, whatever that dollar amount is, it's in your bank account. You just have to show someone a plan to be able to access it. That's when you really get to the heart of how you're going to grow your business. And frankly, that's when you're going to be able to communicate with lenders, investors, and nonprofits like Leslie's in a much clearer and much more effective way. So that's what I would tell you to do. Don't get stuck on the money. Figure out what you would do with it if you had it, and then go sell that plan.
I like it. I like it. Great insight. Leslie, if money's not the problem, what could it be?
I totally agree with Stephanie that sometimes it's easy to say, I need X amount of dollars because I just don't have it in my account, right? And the harder work is figuring out, well, why do you think you need that money? What's going on in your business that may or may not be working? Have you analyzed your products and services? What are your margins like? Are you pricing things appropriately? Are you collecting your receivables appropriately? Or are you letting those sit there and languish and you're not working that receivable? So there's a lot of things you can do internally to make cash flow happen, and you don't really need to borrow money. The second question I would ask of myself if I was a borrower, not only what do I need the money for, how am I going to spend it? How is this going to, and I mentioned this earlier, Stephanie's talked about it. How is this money going to help me generate more revenue, that 2, 5, 10 times more return? How's it going to help me save money? And how am I going to, in the perspective of a lender, how am I going to pay this loan back? Now, this seems like a really obvious question and obvious answer, but sometimes it's not very easy to answer. And so you really need to sit down and say, why do I need the money? But how am I going to pay it back? And that really ties back into what Stephanie said about understanding the levers, because if you understand those levers, then you're going to understand how you're going to be able to pay it back.
Yeah, great insight. John, money's not the problem. What is it?
I think it goes back to all the comments that were already made, but just as business owners, I know how busy business owners are, and they have to all of a sudden become experts on everything, right? And there's just so much. And oftentimes the thought is, well, I'm extremely busy. We have tons of orders. We're really busy. And because of that, the business must be doing well, and I need some more capital to grow. And oftentimes that's not necessarily the case. As Leslie pointed out, oftentimes it might be something within the business, whether you're not watching your margins or you have expenses that you don't need in there, whatever it may be. So I think it's taking the opportunity to step back, analyze where the business is at, if necessary, bring in somebody from an outside viewpoint to look at what's going on, to help kind of pull out where you might be missing items. And don't take it as, hey, you don't know what you're doing, because that's not the case. You know what you're doing because you've successfully built a business. It's just taking that opportunity to step back and look at it from a higher viewpoint and make sure you're not missing it in your busy daily life.
Great insight. And thank you to each of you on that question. I think that was a helpful thought exercise. And I've got a little list of to-dos for all of our business owners as we wrap up here. We do have one question from our audience so far, and it is there access to capital for startup costs for your business? So let's call it, I always called my business like my little baby company, right? Like it's just in its infancy. Is there access to capital for someone in that stage of growth? And I think, Leslie, I'll start with you on that question.
There are options out there for startup financing. My organization does not do startup financing, but there are some places, and a good place to, in some cases, there's SBA financing. John can probably answer this question better than I. In some cases, there's SBA funding available. There are other organizations similar to mine. I am a community development financial institution, or a CDFI. You can look up CDFIs. There are some that do startup financing. Prestamos might be one, and DreamSpring might be one here in Arizona. Check those out. Also check out your local, startup organizations. There are, in Tucson, there's Startup Tucson, and I'm not sure exactly what's going on up in Phoenix, but check with some of those organizations that work with startup organizations. They probably know where there are some funding availabilities.
Yeah, and there's also sometimes opportunities through your local government. Your offices of economic development may have resources and even coaching tools to help you as you look to grow your small business. I know the ASBA has actually partnered with the city of Surprise and their economic development office. So it's been I think mutually beneficial in that space. Another question from the audience: where does a formal business plan fit into all of this? And I think it's such a key component. It was mentioned right at the beginning as sort of being part of your preparation, if you will. But how vital and important is that business plan document in each of your spheres of influence? John, we'll start with you. And we'll probably give about 30 seconds for each of you to answer this one, because we do have one more audience question.
Perfect. So in my world, the formal business plan is the most important when you're looking for that startup money or you're a startup business doing an SBA loan. Very important that you have a good formalized business plan. There is good resources, small business development centers through local community colleges have some opportunity to help you with that. But that's probably the most key point in time is when you're doing a young company or a startup company to have that formal business plan.
Great, thanks, John. Leslie, in your world?
In my world, not so much. We don't work with startup organizations, but in some ways, I'd rather just sit down and have a conversation with you about what you're doing and why, rather than have you spend a lot of time doing a formal business plan. That said, however, it's important, and I encourage people to go through that effort, because it does force you to sit down and answer some very important questions and think about some really important topics about your business and what you're doing. So it's a good exercise to go through. But that said, I wouldn't ask for a 8 or 10 page business plan necessarily. But you need to have the basic concepts of a business plan down for sure.
Yeah, absolutely. And Stephanie, I would imagine in your world, it's vitally important.
So having the plan is vitally important. However, it doesn't need to be what most people think of when they think of a formal business plan. Quite often they think of, a 50-page document with lots of charts and graphs that's got all this text. That's not going to help you with investors. What is going to help you with investors is a clear, to Leslie's point, concise assessment of what you're going to do in your business and the financial projections that back up how doing those things are going to grow into a really big business. And so what I encourage everyone I work with to do is not to worry so much about the text of a business plan, but to turn their financial projections into a sort of business plan, so that whenever an investor asks you a question of, well, how are you going to double users? How are you going to grow, clients by 100 times, in the next 5 years? You're using data to help them understand, and it ties to the numbers that you've already provided them. So you're not risking telling them two different things or giving them two different answers.
That's great. Great insight. Two more. Let's see. We'll do rapid fire on this one. The question is it appropriate for a business owner to invite a banker to the business? They want to go on a field trip to get some perspective on really where those levers are. I think we just put you all in coaching roles, which I think you are doing anyway, but how often or how willing are you all to go on some field trips to help understand your potential client or banking relationship? Stephanie?
I vote yes. I vote yes. I think, and it doesn't have to be your banker, but I think if you're going to work with somebody to help you find funding, they absolutely have to understand your business and they have to know what the levers are.
Yeah, no, it's great insight. John?
That's what bankers enjoy doing. That's the best part of the job. So yes, invite them all day long, because they'd rather be there than in the office. So
that's good. Good insight. So those corner offices aren't all they're cracked up to be, is what you're saying, John. You'd rather be out.
That's right.
All right, Leslie.
Yes, agreed. It makes all the difference in the world to be in your space, to be in your world, to be in your comfort zone, to see what happens in the business, to understand the process and what you're doing. It really gives that third dimension to understanding what's going on the paper. Numbers and stuff on a paper are one thing, but actually see the business operating makes all the difference in the world.
Great. And that's helpful. I think we have 3 people willing to do field trips. I'm sure there's many more in your industry. So that's helpful. And now that sort of the world has reopened a little bit, I bet it's even more enticing for us to really sort of understand with our own eyes and ears and to really to witness that. We'll do this quick last question. What is an average turnaround time from application to funding? What can some of our small business owners expect? Let's say they come to you with pristine, everything's in order. They brought their binder. They have everything ready to go. how quickly are we able to really turn that around? And we'll start with John, go to Leslie and Stephanie, and then we'll wrap up.
Yeah, so I see in that question, it says that they've been open for about a year. So if you've been open for more than 2 years and you're profitable, you get access to some funding, within a few days or within a week, depending on what kind of funding you're looking for. If it's less than a year, we're probably looking at SBA financing. I'd say you want to give yourself, 30 to 45 days, depending on the type of purchase described there. Probably we can get done within 30 days.
Great, good to know.
Yeah, I would say generally speaking, 30 days is probably a fair assessment. And the key here really is having everything in order and a full and complete application. I think one of the biggest things we run into, and I'm sure John can attest to this as well, is there's a partial application. We ask for something, it takes 2 weeks to get the rest of the information. Be prepared to give everything fully and completely as quickly as you can, and that will speed up the process. I will say too, though, there's a difference between getting your application in and a credit decision made, and then actually closing a loan. Depending on what you're doing, if it's real estate, you've got to get an appraisal, and that takes time out of the lender's control. That can add several weeks onto the process. And so actually documenting the loan, there will be a whole new laundry list of things that you're going to need. Insurance, make sure you've got all your insurance stuff in order, and things like that. And that part of the process is often, the timing of that is out of the lender's control, it's out of the borrower's control. We're relying on third parties. So just know that getting a credit decision is kind of the beginning of the next phase that can take a little bit longer.
Stephanie, we have about 20 seconds for your answer. How long is it going to take somebody to go through your process?
So if you're looking to raise capital from angels, that can go quickly, which usually is about 3 months. If you're looking to raise capital from venture capitalists or private equity, unless you already have deep connections, that's a process that could take probably 6 months. So what I tell people is, if you think you're going to need capital in 2022, you need to already right now be planning for the process that you're going to put in place, getting yourself organized and getting yourself ready, even if you don't start the process right away, because it's definitely 3 to 6 months anytime you're looking to raise equity.
Fantastic. I think we could speak for several more hours, and I'm sure I for one would love to sit one-on-one with each of the people watching today and just have a happy dialogue and really sort of dig deep onto their individual. But thank you to each of you, John, Leslie, and Stephanie. What a wealth of knowledge and information. Great panel today. And I really appreciate your willingness to share your expertise. I wrote down some takeaways. I always think it's good for us to recap, and then I'll kick it over to Jim Shakiris. But preparation is key. You can make this easier on yourself than what we may think. Develop relationships, surround yourself with experts, and maybe even a board of advisors, a trusted board of advisors. Learn your blind spots and also be willing to admit where those are. Know what you want and what you need. The lending interview is a two-way street. So they're interviewing you and you're interviewing them. And then finally, learn to tell your own business's story. That takes practice and something you can practice on neighbors and friends and family, but I highly recommend that we all learn how to tell our business story, and that will help us on many levels. So thanks to everyone. I'm going to turn it over to Jim Shakiris now. Jim, one of our great sponsors from Apex, thank you so much for being a sponsor and help us carry out the rest of our Tuesday.
Well, thank you, Jen, and thank you so much to all the panelists for their amazing insight. That was a very, very informative session, so thanks for your time. On behalf of the Arizona Small Business Association and Apex CPAs and Consultants, thank you all for joining us today for what has been a very insightful discussion on how Arizona small businesses can effectively access the capital they need to continue to grow and succeed. Today's conversation underscores just how critical it is to be financially informed and to capitalize on what is available to your small business. I know our small business community will continue to grow and seize upon all the opportunities for advancement out there. Today is bright, but the future is even brighter. My name is Jim Chikaris. I'm the managing partner of Apex CPAs and Consultants. We're a forward-thinking accounting, tax, and advisory firm with a long history of supporting small businesses. Our entrepreneurial spirit and relentless commitment drives us to be the most valuable strategic partner, helping our clients achieve their life's goals through the success of their business. We do this by focusing on the four most important areas to a growth-minded business owner. They are, number one, help you improve profitability. Number two, to help maximize the value of your company. In almost all cases, it's the largest asset they own, so maximizing it is very important. Number three is to formulate a comprehensive tax reduction and deferral strategy, allowing you to invest that money back into the business. And number four, helping the business owner unchain from the tactical aspects of the business so we could focus on those strategic initiatives. Together, ASBA and Apex are committed to helping empower Arizona's small businesses. In Arizona, we've long had a dedicated and bold attitude, and that's reflected in the hundreds of thousands of Arizonans who have had immense courage and dared to start and grow a business. On behalf of the Apex CPAs and Consultants team, thank you to all the small businesses out there. Also, thank you to the policymakers who will be assisting in efforts to support a pro-business environment. And thank you to ASBA for your continued support of the small business community. We appreciate each of you for tuning in and learning more about how your Arizona small business can access capital. As a follow-up, ASBA will be sending out a briefing of the key takeaways from today's event, as well as the full recording of this session. On behalf of ASBA, thank you for joining us today.